Now, acquiring company is considering to take over the target company. Now, for that, importantly, what happens that say, now you have to determine what is the value that you will assign to the target company. Let us say that like the Facebook acquired WhatsApp, then in that case, what is the price at which the WhatsApp is acquired? We understand that say any like the acquisition takes place in that say what is the price which is offered is very important. Now, friends, as far as the term value is concerned, the valuation is possible by number of methods. That is the reason the corporate valuation and mergers and acquisitions we are doing together. A number of methods include something like this. Don't write anything, let me explain you. The first is dividend discount model approach. Dividend discount model approach means the future dividend is discounted in present value term and with that the price is calculated. That is dividend discount model approach. Then we have earning capitalization method. Whatever the future earning is discounted in present value term and with that say you do the valuation. Then valuation based on price earning ratio method. Then you have the valuation say based on like a simple book value method. Or we can say that it is like net asset method. Then valuation taking into account the market value of the assets. There is the assets of the company will be revalued for the purpose of valuation. Then we are going to learn something like this, so the chop shop method, chop shop approach for valuation. Then we are going to have understanding say of the valuation based on free cash flow for equity model. Then we are going to understand free cash flow for the firm model. Like that, say there will be different valuations so which are possible. And you can see that say for one thing only, but for the purpose of determining the value of the target company, we have so many number of methods. Of course, all of them are not going to give you the same answer, they are going to give the different answer. I want you to write in the chat box, from acquiring company point of view, which method of the valuation that they will select. The method that will give the highest valuation or the method that will give the lowest valuation for target company. The answer is very simple. We understand that the acquiring company will select a valuation which is going to give the lowest valuation method. This is what we understand. So basically we understand that say from acquiring company point of view, a valuation method that will give the lowest valuation, that is what the acquiring company is going to offer to the target company shareholders. What will be the kind of intention of the target company? To have more valuation or to have less valuation? Right answer in the chat box. Yes, of course we understand that say in this the negotiation process, the target company would quote the highest value. In a way, that's what will happen, that's between both of them, say a kind of negotiation is going to take place in which the acquiring company will search for the different methods with which it can convince the target company shareholders that say your value is this much only. And as against that, so the target company will have its own argument that say these are the only rumors because of which the prices have gone down. Otherwise, the price of our security is this much. That is the way they will be having say kind of negotiation. This is what we understand. So what will happen ultimately? What will be a kind of range of the valuation? Okay, a range of the valuation that will be developed. All those things actually we are going to learn over here. And importantly, friends, over here we are going to learn all these valuation methods, and apart from that also certain special valuation methods is what we are going to learn say in this chapter. Now let us say that after too much discussion, it has been decided that the value of the target company is an amount of, let us say, rupees 100 crore. Okay, like long valuation. All that so the discussion went on and then so the valuation is now 100 crore. Now for the purpose of discharging consideration, there are two methods. We understand that say one is that say you may discharge a consideration in form of cash, and in that case there is no issue, and other is that say you may issue the shares. Now my question to all of you is, listen to my question carefully, that say if at all the consideration is discharged in form of shares, then in that case the next one come is the valuation of the acquiring company shares. So acquiring company would like to quote its value higher or lower. Answer me in the chat box. Yeah, that's very true. We understand that the acquiring company will search for a method with which it is able to get the higher value. In a way that say the fundamental price or the intrinsic value based on this method is the best method, and that best method will always give the high price. So what happens that say is required to give less number of shares. That is what say the A limited will have an intention. And on the opposite side, the target company will search for a method because of which the acquiring company value will be less. This is what's the kind of process that will take place. So here we understand, say we are supposed to have the valuation of the target company, we are supposed to have the valuation of the acquiring company, and afterwards, say we will be having, say, a kind of discharging of the consideration.